And Britain's Export Finance Agency is set to add Nigeria's naira to its list of pre-approved currencies. This allows the agency to finance transactions with Nigerian businesses in the local currency. Now, the naira will become one of the 3 West African currencies that UK Export Finance has pre-approved. Analysts have welcomed the impact of the financing option on the local currency. However, they do say the move may increase Nigeria's liability as trades mature for settlement. Analysts have also questioned the rate at which funds will be dispersed, since local interest rates are in high double digits. Well, economist Gabriel Idahosa joins us from Lagos to delve further into the impact of this decision in the country. You're very welcome to the show, sir. Now, there's certainly no doubt that this decision will improve trade between Nigeria and Britain, but give us a sense of the pros and the benefits of this move to the country.
So essentially, it allows Nigerian importers to be able to do the transactions much faster because they don't have to go through trying to access foreign currency directly. So it will encourage a lot more imports from existing importers from Britain and also new importers who want to do business with Britain. So it is on the side of the importers a plus. On the side of Britain, it gives them more competitive advantage because they are looking at the size of the British trade in Nigeria and the fact that you have very strong competition from countries like China and India who are trying to expand their scale of the business in Nigeria all the time. So both sides have something to call a win from this. Britain gets to be able to do more business with interested importers. Nigerian importers are able to transact these businesses much faster than they would ordinarily have done it.
Well, there's certainly, with the pros come cons as well. And some analysts actually have pointed to the fact that this move does give made in Nigeria goods less priority moving forward. It certainly will help local importers to buy British goods. But what about buying Nigerian goods? What for you is the downside for Nigeria?
Well, essentially now, if you want to import any products from Nigeria or from Britain, most importers have access to foreign currency. So this facility does not essentially create any disadvantage for Nigerian-made products. Because if you really want to import British products today, the access to foreign currency is much better than it was, let's say 6 months, 1 year ago. If it was 1 year ago, you might say, yes, this will give some advantage. But right now, the foreign currency market is so well funded now that it is not really a big advantage for a Nigerian importer. It is more an advantage for an exporter in Britain who wants to access Nigerian market. It enables a British exporter to get into Nigeria faster. But it does not give an extra incentive to a Nigerian importer that wants to import from Britain. Because with or without this, any Nigerian importer can have access to foreign currency at the various levels, either from the investment and export window, or from the SME window, or from the interbank foreign exchange window in the foreign currency market in Nigeria now. So there isn't any downside in terms of made in Nigeria products. All products made in Nigeria will still be able to control their share of the market with or without this facility. It's essentially for Britain to be able to be more competitive in coming into Nigeria, not for a Nigerian importer to be able to get easier access to British products, because you can get that now. At any time, any importer now has easy access to foreign currency.
But as we continue talking about the downside, there still have been questions about how this might increase the central bank's liability as we see some of those trades mature for settlement. So what if the central bank is unable to remit funds to the UK once these trades are ready for settlement? What are your thoughts on the views that this poses some liability risk for Nigeria's central bank?
Well, I think the British government is very well informed about the direction of the Nigerian economy and our foreign currency capacity. In the next 2 years, Nigeria will import almost zero petroleum products, almost zero food items that we are gradually becoming self-sufficient in. The total import bill for Nigeria is essentially 60% petroleum products and food. In the next 2 years, that will almost become zero because we are going to be self-sufficient in refined petroleum products. We are already getting self-sufficient in rice, one of our major imports. So the foreign currency risks are going to be significantly lower in terms of the direction of the exchange rate. And this has nothing to do with the price of oil. It just has to do with the fact that we are going to be much more self-sufficient in the significant items, about 60% of our current import bill down the road in the next 2 years. And I think most of our foreign partners are aware of that, and they are factoring that into their long-term plans in doing business with Nigeria.
Well, sir, can you give us a sense of how this announcement has been received on ground by both the public and private sector in Nigeria?
Well, I think to a large extent, people feel it's more an attempt by Britain to get into, to be more competitive, to be able to compete, particularly with countries like China and India that are very aggressive in the Nigerian market. For the British business in Nigeria and Nigerian businesses doing business with Britain, access to foreign currency has not been a very significant issue recently. If this was 2 years ago, perhaps it would be a big deal. So for most Nigerians, it's fine. It's good that Britain is doing this, but it does not significantly improve their access to currency to do business with Britain. So yes, people are happy that it happens because it will just make the process a bit faster. Maybe instead of applying for the foreign currency yourself and it comes in about a month or two, you will have it directly now through this facility. But it's not something really big in terms of how it affects the business between Nigeria and Britain on the Nigerian side. Of course, it's big for Britain because it enables them to compete much more with the Chinese and the Indians who are very aggressive in this economy.
Right. Well, many thanks for that insight there. Of course, that was Gabriel Idahosa, an economist, joining us there in Lagos.